Okay, so let's discuss the Manchester United stock, which could be an incredible investment opportunity for you guys that you won't want to miss, and here's why it's worth considering. Recent news broke that Sheikh Jassim is currently on pole position to acquire the club, leading to a significant surge in the share prices during the after hours of the New York session last Wednesday, as you can see on my chart. The prices reached a peak of 26.65 per share on Thursday. However, subsequent reports indicated that no definitive progress had been made between Ineos and the 92 Foundation owned by Sheikh Jassim in terms of a preferred bidder. This news resulted in a slight decrease in share price with the day closing at $24.88 per share, as you can see here on my chart. Since then, the price has continued to gradually decline due to the extended sale process, which may impact the team's transfer window and consequently affect performance in the upcoming season. Now, let's delve into the two bids presented by the involved parties as reported thus far, but first don't forget to hit the subscribe button for more financial insights. So the Glazer family has set an asking price of £6 billion, and the two bids are under consideration. The first one from Ineos, in which Sir Jim Ratcliffe offer suggests that the six Glazer siblings would remain at the club temporarily without clearing out the debt, which is approximately £535 million. Joel and Avram Glazer would retain a 20% stake, but they would be contractually obliged to permanently depart in subsequent years, with Ineos purchasing their remaining shares. Ratcliffe offer relies on loans and bonds obtained from prominent global banks, which raises concerns among investors and fans due to the club's mounting debt since the Glazer family took charge. This development has caused frustration and anger among Manchester United fans on social media, potentially signaling a negative sentiment if this offer were to be preferred. On the other hand, Sheikh Jassim's offer entails a complete takeover for £6 billion, including the clearance of all debt and a commitment to invest in infrastructure, a new stadium, and player transfers. From a technical perspective, it is anticipated that the price will continue to experience a gradual loss of momentum in the coming days, potentially returning to the levels seen last week, particularly if Ineos were to make a last-minute offer, which could likely have a negative impact on the stock price. So basically, if some news will come out that Ineos will make another final bid to persuade the Glazer family to sell the club, then we might see the share price continuing to drop until it reaches this gap and it will fill this area, which in my opinion is a good reversal area, because if you look in the past, we had previous gaps that were filled and the price came back to them to fill them. Also, here is another area in which the gap got filled, again another one, so it won't be any surprise if the price goes back down, fills this gap, and then we go and break the top. Here we have a daily channel in which the price bounced up and down on the upper and the lower trend line. So as things stand, you can see that the price broke out of this channel and now it's making a consolidation. We didn't break the previous lower high. We have the all-time high located at $27.69 per share, and as things stand, I'm expecting this to be a correction and then the price to shoot back up and make a new all-time high. Nevertheless, regardless of this development, positive news is expected for both investors and fans based on the current chart analysis. Should Sheikh Jassim secure ownership of the club, it is possible to envision the share price climbing towards a $30 level, like I said, indicating a potential 33% price increase from its present levels. So if we look at the chart, we have a 33.85% price increase if the price reaches the $30 area. So for instance, if you were to invest $1,000 in shares at this moment, reaching the $30 mark would yield an overall return of approximately $300 or around $8 profit per share. This opportunity holds a significant promise for both investors and fans, particularly considering the imminent conclusion of the sale process. So to sum it up, this represents a compelling opportunity to obtain substantial returns in a relatively short period, both as an investor and as a fan. So this could be a nice stock to watch, because most of the stocks take a long time to develop. Of course, if you're not talking about penny stocks, but stocks like this don't offer you a fast return. This could be a nice one for you guys because the sale process is almost reaching its end, so it might the price might bounce up strongly from this level that we discussed. So keep an eye out on the chart. So with that being said, don't forget to hit that subscribe button if you like our content. Also share it with your friends and trade with care. See you guys next time.